What's up, guys? Anthony here, Special Analysis. Bring you a quick recap of the daily live trade room this morning. Had back-to-back economic news releases, 8:30, opening bell at 9:30, 9:45 data, 10 a.m. data, OPEC meetings going on all day today. I mean, if you looked at crude oil pre-market here, we had a push here at from 4 to 6 a.m. And then after that, I mean, it just turned into a pile of dog, you know what. And we knew that OPEC was having their meeting, and we knew that as the minutes of the meeting were going to be released, that the market was ultimately going to have a reaction to those minutes, which is all fine and well because volatility produces opportunity. But we had to be really patient to let all the crap here work itself out until the market finally started to give way, finally started to commit to a direction, finally gave us some market structure that we could work with for a potential entry set up. And I want to kind of break that down, ultimately what it looks like here. So again, really kind of crappy price action here. Market starts to break down. We retest this prior low. You can see that we even consolidate here, a couple candles, really waiting to find out if the market's going to commit to a direction. And it certainly did. So you can see we had this massive impulse, right? So this is a sign that there's a pile of sellers present. Now, we don't want to enter the market based on this move because there's a better chance than not that we're trying to catch a falling knife, and that is not how we trade. We trade strategically with a great amount of discipline and consistency. So what do we look for? We look for market structure. What is market structure? It is an area, essentially, where buyers and sellers transact until there is a difference of opinion, and that difference of opinion, we await a confirmation. So market structure is right here. You can see inside of these lines that I have drawn here on the chart, and I do this live for my clients every single morning. I take my 12 years of experience and I pour it into them for 3 hours. We defined an area where the buyers were struggling to recover from this sell-off, okay? So we do that, we pull this correction through, and ultimately what happened is we had the sellers overtake the buyers in this area on this candle right here. So from this point, you can see we had a daily pivot really close, okay? It is what it is. You can't change when or where price action is going to transpire. But ultimately, we pushed to the daily pivot from the break of this candle here through this corrective measure, and we just kept going. So again, another large candle, couple small candles, right? Buyers and sellers are transacting, trying to figure out who still remains in control. And you can see this little red candle here broke below these two little pullbacks. And guess what? The market keeps selling off into the next daily pivot. Breaks that daily pivot into the weekly pivot. Breaks that weekly pivot into a downward trend line, guys, and ultimately falls almost as low as this next daily pivot here before starting its recovery. Now, are you going to pick the tippy bottom to get out? Of course not. But had you entered somewhere in this vicinity, you had a chance to take some quick profits, 20 ticks at the first pivot. At the second pivot here, you had 106 ticks. At the weekly pivot, you had 145 ticks. And at the absolute low, before we started to reverse, you had 234 ticks. I'm pretty sure if I provided areas like this for you, and you were willing to pay yourself and protect yourself, meaning take profit, move your stop to break even, take more profit, every time the market presents you the opportunity to continue to capture more and more profit, I would imagine that over time you'd probably be doing better than you currently are as a trader. Now, I'm not saying that I'm the Holy Grail. The Holy Grail doesn't exist. The Holy Grail is the trader themselves. I am simply here to perform the analysis, interpret the analysis in the price action, provide the order flow, and interpret the order flow as well, so that you have a full understanding of where buyers and sellers desire to transact based on traditional technicals and order flow. During this process, it allows me to identify these areas and you to then make an educated decision for yourself if you're prepared to enter the market here, if you're prepared to take profits here, 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 and probably somewhere along the line here as we approached what? $75 round, okay? Psychological number there. I tell my clients, pay yourself and protect yourself on the approach to areas of either support or resistance. In this case, it would be support. $75 round is an extraordinarily powerful psychological number in the light sweet crude market. And I would have told them 5 to 10 ticks prior to, you want to keep paying yourself. And that was the opportunity here, guys, to literally capture this phenomenal move to the downside. But you had to be patient. We got together at 8 o'clock in the morning, and we had economic news releasing until 10 o'clock in the morning. This move didn't come along until 10:54. So, if you're willing to be patient, disciplined, and employ some consistency and a strategic trade plan, guys, I will help you identify when and where I believe the lowest risk opportunities exist. So if you want to learn more, there's some links below this video. Check them out. Feel free to reach out to me. I'd love to work with you. Have a blessed day.